Hello, and welcome to the Onalytica webinar, where today we'll be looking at FinTech and the key topics and trends within FinTech. Joining us in our discussion today, we are pleased to have David Brear and Spiros Margaris. David Brear is the Chief Thinker at the Think Different group. He is a FinTech Strategist, speaker, scholar, and writer who is continually voted as one of the most popular business and FinTech influencers. He spends his time at Think Different group helping banks, regulators, and governments be better. Spiros Margaris is the founder of Margaris Advisory and senior advisor to the Fintech Forum, the first and largest community for FinTech in Continental Europe. He is also an investor and senior advisor to Capilendo, a peer-to-peer crowd lending platform, and MoneyMeets, a FinTech supermarket. Spiros has more than 20 years of national and international experience in investment management, research, and innovation, and technology management. Hi Spiros and David, thank you for joining us today.
Thanks for having us.
So today we'd like to talk about FinTech. What do you think are the most impacting topics within FinTech today?
Sure. Yeah, no, I'm happy to run through those. I think there's a huge amount of different things that are kind of impacting the market at the moment. It's probably one of the most interesting things that are happening in this space at the moment. To be honest with you, we see huge amounts of change happening from a payments perspective in terms of new players, new technology. Like I say, purely from a technological perspective, we're seeing really exciting things happening with regards to blockchain, with regards to artificial intelligence, what's happening with Internet of Things, even through to boring spaces that we used to sort of poke fun at, like regulation. We're now seeing massive amounts of very interesting things happening. We're seeing, unfortunately, some political and environmental changes happening across the globe, which are, starting to have reasonably significant impacts across the sort of banking and FinTech space. But, arguably, Spiros, I'm sure you'll agree, this is one of the most exciting times to be sort of working in the industry that we are at the moment. And I think, 2015 coming to an end, actually, it's been one of the most exciting years that have been in banking and FinTech for at least a decade, I'd suggest.
David, you just mentioned payments. What are the most interesting things you see in that space?
Well, I think the most interesting thing that's sort of happening in payments at the moment really is that, the payment is actually probably the most boring part of it. We're seeing really exciting companies springing up in the payments ecosystem, which are really sort of focusing on customer experience. We're seeing people pushing things like the payment to the absolute back of the process. And, while these things are happening and offering, really alternative options in terms of what the customers can do, and actually even some of the technology providers could have access to, then, I think that's a really exciting time within payments. But how about yourself? What sort of trends do you see within the payment space?
I think social payments is one of the key trends I see. Let's look at Facebook, Snapchat, who want to get into that space. If you look into China, we see companies like Alipay or WeChat, and they have a huge advantage because to other payment services, because they already have a customer base, a strong customer base. People exchange information on their platform already, and so they're in a very good position, the social payment players. And
yeah. What do you think about we've got obviously this year the rise of things like Apple Pay, and obviously Apple have got 80 million customers globally, haven't they? What do you think their chances are of, I guess, being one of the winners in this space over the next few years?
Of course, the space is quite crowded. And there's some really strong players, as I mentioned before, Alipay or WeChat in China and Facebook coming. But they have some things going for them. It's the user experiences. People are used through iTunes to give Apple their credit card information, transact through their credit card businesses. They have a very strong customer base, loyal one, and of course, one of the key things they have is the money they have. And with the money they have, they will buy whatever is missing. So there were moments I thought they would be the winner, but I'm not sure about that. But they will be definitely one of the winners in that space, I think.
Yeah.
And yeah. But now we spoke about the payments. David. I mean, and the one technology that started in payments is blockchain. And I mean, as we all know here, there's no place we can go where blockchain, Bitcoin is not a topic. Do you think banks do get it? And are banks taking the right steps?
It's hard to say. In a nutshell, I'd say no. Not wanting to sort of cast too many aspersions of what the banks sort of do and don't know. But blockchain is a hugely complex technological subject matter. I think this is probably one of the first times that somebody so senior in a banking organization is going to need to know so much about such a technical concept. I think there are really interesting steps that people are taking. You know, I've seen the likes of Barclays and Santander sort of come out with we have 26, we have 27, we have 45 use cases for blockchain technology, and I think that's kind of incredibly exciting. But I think there's probably a long way to go until we sort of start really seeing banks doing really interesting things with it. Obviously, we've seen UBS this year with what Oliver Busman has done to create one of the first blockchain innovation labs within an organization. And I think at the point where we start seeing very large companies like UBS investing so heavily to do something in this space, then the momentum that's going to come around on this is significant. I kind of see blockchain is kind of like a nice reset switch on a lot of debt from a technological and from a process perspective that a lot of the banks have inherited over the last kind of 25, 30, 40 years. And I think in some instances blockchain is definitely an answer to a problem. But in a lot of instances, I think people are now sort of scrabbling to try and find out what they can do with it, rather than starting either with a customer or a business problem. But I think there's tremendous amounts of savings and earnings that could be unlocked through blockchain. It's really just getting to the point where they really understand how to do it. So, how about you though? Do you believe the sort of benefits outweigh the costs when it comes to what blockchain can provide?
That's a very difficult question to answer, because on the one hand, what we will see, there will be, once blockchain is implemented, we will see a lot of job losses because of the fact that they will cut out the middleman. On the other hand, banks see huge savings, and money to be made. And since banks are very much in need to find new business models, they put a lot of effort behind blockchain. And so it's, as I said at the beginning, it's very difficult to answer if without job loss against profits. But let's not forget that other industries, I mean, the music industry, publishing industries, and many more face the same technology challenges, the changes, and they found ways to still make money. Like, artists gave more concerts. Media companies had those 360-degree deals where they got involved in more parts of the business. So I think banks and the people employed in it will have to find new ways, and they will find new ways to compensate for the losses once blockchain will take away a lot of business. But we all have to accept the fact that changes occur much faster pace than we're used to, or probably comfortable with. But that's a reality we have to deal with.
Yeah, I think we're sort of seeing everybody feeling quite sort of bullish, aren't they, about all of the different potential. But like I say, I think at the point where actually we've got some real sort of hard and fast use cases around how blockchain can be really sort of applied to the business, then I think actually we can start seeing a little bit more traction. But I guess given that, when do you see us really sort of seeing something in the mainstream from a blockchain perspective? I know there's lots of things in terms of partnerships going on, isn't there? And we've seen people like Ripple and Earthport bring maybe a little bit more sort of legitimacy to some of the sort of endeavors around payments particularly. But how far off do you think we are seeing something in the mainstream?
As I said, that those partnerships, the efforts banks are doing is extremely promising. But I'm not alone in this opinion, but I think we're not going to see it in the next 3 years. It's going to take much longer, and it's going to take much more longer until it goes mainstream. And I mean, fintech companies, of course, are more agile, innovative. That speaks for them to find the first mainstream blockchain killer app.
Mm-hmm.
And banks, of course, what speaks for them is, of course, their customer base, they have the money, and they probably will unite to put out a standard, a blockchain standard which more people will use. And if you remember, maybe some people still remember VHS and Betamax. Betamax videotapes were superior to VHS, but there were more players united behind VHS. So VHS became the standard. And of course, we will see similar things in blockchain happening. That's the way I see it. But to sum it up again, I think we're still far away. But who knows? I mean, innovations don't come with money. They come, sometimes it's pure luck. And maybe it will happen faster, but the way we see it now, it seems still far away.
Yeah, no, I completely agree. I think there's been real good progress this year in terms of things like the R3 consortium from a blockchain perspective being put in place. But even with the best sort of will in the world and all of the investment that would be required, then something from a mainstream perspective is probably going to be at least sort of 6 years away. I think Chris Skinner recently sort of put out a blog post, didn't he, saying he doesn't expect it to be within the next decade in terms of hitting mainstream. But I think we probably get into semantics about what sort of mainstream means really there. But I think one of the main things that blockchain really has against it at the moment, and the reason why a lot of people are reasonably worried that it's kind of the emperor's new clothes in terms of technology, is really just getting over that hump of ignorance that everybody has around actually how it works and what ways that it can be used really. And I think that's not only the banks themselves in terms of the areas of investment, but suppliers and equally the regulator as well. They're very much we always sort of say it's kind of a nice technology is wonderful until the regulator tells you what you can and can't do with it. And I think the regulation space within blockchain generally is going to be a really interesting one. The FCA have put out lots of feelers and kind of open dialogues with industry experts with regards to blockchain. And I think while they're still sort of in a process of really trying to get to grips with how it can be used and how it can be benefit to them as a regulator and to the banks as an industry, then I think that's going to be an interesting challenge. But I think regulation more broadly, though, not just sort of pertaining to blockchain, is actually, oddly enough, one of the most interesting sort of things that's happening in the space at the moment. I think the European governments, and lots of efforts, particularly within the UK, with regards to what the government and the FCA have done, has been pretty impressive. I think 2015 has very much been, I kind of think, the year where fintech has really sort of grown up, and I think it's only been able to grow up with the very sort of fruitful soil that the regulators have actually allowed them to do. So we're seeing, like I was saying about blockchain, really we've seen the regulator come out in the last, I think, 3 or 4 weeks now and really say to banks, actually, things like cloud technology are perfectly okay to be using as a banking organization. And I think where banks have kind of used regulation for such a long time to sort of be a defensive mechanism of why they can't even think about doing something. And arguably, I think with all the changes from a regulation perspective, I think the regulator is really kind of egging them on now. So it's been an interesting one, though. I think this year that there's been quite a lot of chatter about the fintech players getting a bit of a light touch when it comes to the regulator compared to some of the the incumbent organisations. What do you think about that, Spiros?
This point that fintech startups are treated with a light touch. Yes, I have to agree 100%. Yes, they are treated with a light touch, but there's a reason behind it, because regulators and governments, besides of their goal to protect consumers, they want to drive innovation and to create jobs. And they want to also increase competition in the financial sector. And last but not least, they want to keep the financial centers an attractive destination for money and talent. So therefore, it's legitimate that they use a light touch for startups. But the comfort incumbents and wanting the fintechs, this light touch will change to more heavier touch once the industry matures. So it's good now as it is that we have a light touch or the sandbox approach that will start in the spring of 2016, but it's not going to be forever, but it's a good way of nurturing innovation and the things I mentioned before, creating jobs and keeping the financial centers an attractive place.
Mm-hmm. And do you think the regulators really sort of understand that in terms of that kind of nurturing environment that is required for, particularly for fintech? I see some of them embracing that quite well. What's your thoughts on that?
I mean, UK, as you mentioned before, beautifully does a fantastic job. Look at David Cameron and Boris Johnson. I mean, not only the regulators, but also the government. Wherever they go, Cameron or Johnson, when they went to Asia, they pushed for the FinTech Hub UK because they all clearly understand how important FinTech is for the financial industry. And let's go away from the UK. Let's look at Singapore. Last June, a managing director gave a speech of the Monetary Authority of Singapore. And one of the key statements was they must not seek a zero-risk regime. And that statement was clearly addressed towards the fact that they want and they have to nurture innovation in fintech. So regulators and governments globally understand the importance of fintech and that they need to support it. But it's not everywhere the same and not everywhere as advanced as we see in the UK. But the great thing about the UK is, as other regulators see the success of the fintech industry within the United Kingdom, people will copy those policies, will copy that approach. So the UK does a fantastic job in the respect for all of us. And something I wanted to ask you, David, we had once discussed before. I mean, a good example of what we see in Europe happening, specifically in Europe, is the opening up by the regulators with the changes that are coming with PSD2. How do you feel that will impact the banking industry and the fintech players?
I'm incredibly excited about PSD2, which is probably quite a sad statement to make in itself type thing. But I think actually, if I kind of look back over 2015, I think the sort of posting and acceptance of PSD2 is probably the most important thing that's happened in banking and fintech. I genuinely believe that it will be the thing that really distances the European potential for innovation and fintech change, as opposed to other financial powerhouses like New York, or obviously from a technological perspective into places like San Francisco. For anybody on the line who doesn't know, PSD2 is very likely sort of pushing banks to do the types of things that they've talked about and decided was a bad idea. So PSD2 forces all of the banking organizations, with the customer's permission, to allow third parties to access data and make payments on behalf of the customer. So if a customer uses their username and password credentials, then essentially a third party, obviously a trusted third party, would be able to access that data and make payments on behalf of that customer. Now this is huge. This is whereas the banks fought quite hard, and particularly in Europe with the advent of things like Mint, to sort of stop account aggregation being anything other than from a presentation perspective. And while within all of the European internet banking terms and conditions that all of the customers have signed up to, there is very clear liability clauses in there that stop customers sharing any of those credentials with any third parties. So, at the point where a customer can essentially do all of their banking in one place through a service provided not by a bank, this has really massive repercussions for the banking system. There is the potential that, and I know disintermediation has been, become a bit of a dirty word in the same way as innovation has over the last sort of 18 months or so, but there is a real potential for wholesale customer interaction disintermediation from the banks. And I think that, the impact of that will be, I think, felt for a very long time. The banks have got through till December 2017 to implement all of the sort of technology that they need to put in place in terms of the exposure of the APIs and kind of everything that they need to do. But I believe the tone of the next couple of years of banking change has very much been set by by this, and arguably having sort of worked with some of the offshoots of actually what this will be in terms of what the the European Commission intends PSD2 to do. This is but the first start. This is the first step in the process, and I think it's incredibly exciting.
David, do you think banks should see this as an opportunity or threat?
I think it's going to be very difficult, given that most of the banks have kind of looked at this in terms of kind of exposure of APIs and working with third parties and sort of losing an element of control. All of them have looked at this and decided it's a bad thing to do. Therefore, I think initially everybody's perspective on this was that it was it's a huge threat. For any industry that is kind of blessed in the way that financial services is, with very high engagement in terms of people logging into internet banking and using mobile apps and all of these different things, then actually, anything that can reduce that is going to be a threat, not only from a brand perspective, but a lot of the banks' cross-sell, upsell opportunities are kind of off the back of somebody coming in and doing something very, very sort of minor, like checking a balance or making a kind of a small payment to somebody. So, I think there is a huge threat there in terms of the sort of business revenue models that banks have. But equally, some of the more enlightened organizations, and, it's worth sort of noting really, despite, most of them looking at this before and deciding it was a bad thing to do, there are people out there like Garanti Bank in Turkey or BBVA in Spain who actually have done this before. There's organizations like FIDO who are just, their whole business model, their whole reason to be in the world is sort of predicated on working with third parties to develop new features. Yeah. They base themselves on APIs. I think for some of the new organizations that are coming through, like, Mondo in the UK, particularly, who are, at the moment in their kind of alpha release of becoming a kind of a bank, their whole service, their whole model is kind of fundamentally based on working with third parties, exposing APIs, exposing data, but doing it in a controlled fashion and really sort of being able to benefit from it. I think arguably the technology side of things in terms of the APIs and the kind of adherence to the regulation is probably the sort of smallest impact of it, really. Banks are not used to working in this way in terms of, in terms of the sort of change of these organizations. So arguably, I'd probably see the sort of cultural ramifications of PSD2 probably being more difficult for the banks, particularly from an incumbent perspective, to really sort of deal with. A lot of the organizations that I come into contact with, you could sort of describe, the sort of culture as kind of like a lost love. I think once love is gone in a relationship, it's very difficult to get it back. And I think once a culture of innovation and change within an organization has gone, then it kind of feels like it's very difficult for those guys to get back again. So, and that's probably where a lot of the fintech startups are kind of really sort of streaks ahead. But what's your perspective on that? Do you think an incumbent really can ever innovate like a fintech can?
No, probably you already gave the answer. When the love is lost, then it's difficult to come back. My short answer would be no. although we all know there are a few good exceptions, and those exceptions, as we know, prove the rule. I believe people don't work in banks because they want to be entrepreneurs, and that goes also for the management. But to put this all in perspective, I mean, a bank and a company is more like a ship tanker, and the fintechs are more like speedboats, in my view. And both have the clear advantages, but they can't be both at the same time. So my conclusion would be more that the future will be a future where banks and fintechs will work in collaboration, because that would create a true win-win situation for both of them.
Yeah, no, I think that's a fair point. What do sort of large-scale financial institutions have to do you think, to sprinkle some of the sort of fintech fairy dust across themselves?
I mean, I would hire more startup entrepreneurs who've proven as fintech startups entrepreneurs that they know the business and they can execute. Give them carte blanche, means power, and trust them. Probably a scary thought for an incumbent to trust a startup entrepreneur. And it's two different worlds. But so it's, in some ways, I think it's easier for them to start to fund or start a new fintech company than to change their legacy system or thinking. And everybody knows that saying, culture eats strategy for breakfast. So when you believe in that saying by Peter Drucker, then it's even more difficult to believe that the bank can change its culture to become a more agile company. And when do people change? People change when they're really down first, and because they have to. Banks are not there yet. So I can't see it. I mean, a great example was Apple. When Steve Jobs came in 1997, they were really down, and how you could tell they were down. They brought him back, and Steve Jobs had to ask Bill Gates for money. So you realize he got things done, but they were down. The willingness to succeed was there. So as long as banks are not there yet, so it's difficult to believe that they will change to become more agile. But as I said before, David, there are exceptions, good exceptions out there. Any of you want to talk about which you see that they can change culture and make them more fintech-like?
Yeah, there aren't, given the amount of banks there are on the planet type thing, there aren't that many out there that you can really sort of, point to and say this is the shining example type thing. I think the interesting thing is, sort of culturally, a lot of organizations this year particularly have made lots of investment into things like innovation labs and capability internally to really sort of start to force even a small group of people to really sort of think differently in their organization. And I kind of think that's an interesting trend, because it kind of feels like the organization is actually one of the limiting factors now for innovation. So whereas before scale and investment was used as a sort of a defensive mechanism for startups, then now actually the startups are probably more adept at delivering change at the pace that they need to. So the agility that you describe really just isn't visible in a lot of the the incumbent organizations. But that being said, there are companies that have done very interesting things in this space. If we look at somebody like BBVA over the last maybe sort of 4 or 5 years, they've been making some really interesting moves with investments in things like Simple Bank, in terms of really investing in that company to understand a lot more about how a small innovator actually works. Obviously, most recently, those guys have bought, I think it was a 35% share in Atom Bank in the UK. This is a huge banking organisation like BBVA, paying, I think it was £45 million for a 35% stake in a UK bank that only got a banking license 9 months ago and has no customers. Knowing a little bit about what Atom how they've set themselves up and what they've done, then there is clearly some very exciting things happening there. But BBVA to make such a kind of an interesting leap in, really a leap of faith in terms of that investment is pretty impressive. And, they have done, other particularly interesting things like the implementation of, they sort of moved away from the Microsoft tools internally and implemented things like Google for Work in their organization. So kind of all of these things to me kind of indicate a company that's really trying not only to change the way that they deliver experiences to their customers, but fundamentally shifting things in terms of their organization. I think it was their CEO, wasn't it, who's recently said by 2020 he expects their organization to be more like a technology company than a bank. And I think, the investments that they're making continually sort of feel like actually he's really sort of living up to that. But, we've seen Santander equally do very interesting things this year, I think, with Mariano and the kind of Santander Innovation Fund in terms of what they're doing there. I think they published, was it FinTech 2.0, I think they called it, where, they sort of proposed that their long-term strategy actually is just to be partnering up with people a lot more. So, maybe this year, from a fintech perspective, actually, fintech became more of a challenger for Santander to their suppliers necessarily than it did to them as an industry. And I think, if generally speaking, if I'm ever asked who would be the sort of shining light that I would point to, I always kind of go back to the mBank story. mBank, for anybody who doesn't know, was a kind of a small Polish bank, and they weren't particularly innovative. They weren't particularly sort of in desire from their customers, but by a very small investment in the grand scheme of things, I think they only spent something in the region of about 40 million euros. And spent 18 months, which is another astounding thing given the sort of duration of many bank transformations, completely changed how they delivered work and actually the experiences that their customers had. I wouldn't like to say it was easy, but I'm sure it was made a hell of a lot easier by having somebody like Mikko Panovic at the sort of helm to lead those things. So, I think the interesting thing that I always sort of take from the mBank story and very much see with what Mikhail is now doing at the Nordea Group is if you don't change the culture of the organization, then all you're delivering is projects. And projects end and people go back to what they were doing from a day-to-day perspective. And if you don't change the way people behave and the way people are sort of act and think, especially when, senior managers are not sort of closely watching them, then the organization won't change. And I think, this is why I believe, things like the mBank bit and the sort of current process that, Mikhail is going through in terms of Nordea has been successful is, he places as much emphasis on the processes of escalation, the governance processes, the ways that decision making is managed, as he does the engagement around what the customer experience is going to be. And I think that balance in most organizations is sort of definitely missing, really. If I was to kind of summarize, I guess over the discussion, really, I'd sort of say this year is definitely, in my perspective, been probably the most exciting that I've been involved in this industry. I think both from a technology perspective, in terms of the regulation, in terms of the moves that the major players are doing, it's been a really exciting year. I think the best thing I can say is that if 2015 was a film, I'd be looking forward to the sequel, as it were. So, yeah, in summary, I think it's been a really fun year, and I'm really looking forward to 2016. How about yourself, Spiros? How would you sort of summarize
But I make short. For me, the three players I see is the fintechs, the incumbents, and the consumer. If I want to say something about the fintechs, we only scratched the surface of the opportunities ahead of us. And it's not going to be opportunities 2016, 2017, 2018. We have way to go. I mean, as long as we use technology, there will be fintech opportunities. That's for fintechs. For the incumbents, it's also a gret time because through fintechs, they're forced to bring in innovation. They're forced to change if they want it or not. So in some respect, it's a great time for incumbents because they can't do it themselves. So they need the help, and fintechs do provide their help, psychologically and market help. And third of all, customers. I mean, the customers are the biggest winner of all of this push by fintechs and the changes we see with incumbents, because they will experience better banking experiences. So, I mean, for me, I look forward to a bright future with a great banking experience for all of us, to sum it up. Joe, I give it back to you.
Yeah, thank you guys. That's been really, really interesting. It's great to hear you guys talk about fintech and all the subjects within it and what's going to impact on us in the next year. Whilst we've been talking, we've actually had a few questions coming in from the audience. So if you could spare a few minutes and you wouldn't mind hanging on the line for a bit. We have a question, first of all, how will the increasingly restrictive regulatory environment impact the viability of innovative fintech solutions for banks?
I think that's a really good question, and I think we've probably gone a little way of answering that in terms of some of the things that we said. I think the regulation is actually offering much more of a kind of a fruitful soil for innovation than it ever has before. I think I remember the days of the kind of the conduct of business regulations and kind of all of these things. They were seen as very much kind of shades of grey material that really told the banks very loosely what they couldn't do, but didn't really tell them what they could do. And I think particularly when we start talking about, the things like PSD2, the regulation from my perspective is really sort of supporting not only giving the banks all of the opportunity to really sort of innovate in this space, but equally with kind of lowering of the barrier of entry with regards to applications for licenses. We've seen, I think it's 35 license applications in the UK in the last, I think it's 20 months now. We sort of hadn't had anywhere near that over the last decade. So, I kind of think regulation is actually in favour of innovation. And I think, in part that's because of, a want to try and de-risk the industry to a certain degree. I think 2008, if nothing else, it kind of showed to everybody really we probably had all of our eggs in one too few baskets, as it were. So the regulator is very much trying to sort of foster innovation, foster competition, and I think I think that's really that's going to continue over the next sort of 4 or 5 years, definitely.
That's great, thank you. Okay, so another question that's come in. I think this one's specifically for you, Spiros. It's on the Swiss fintech space. Why is nobody trying to build a virtual bank such as Mondo or Starling in Switzerland?
I think because Switzerland is not as far ahead in regulatory terms to support such a fintech company yet. But I think FINMA, the regulatory organization, is about to change, and probably we will see in 2016, 2017 changes happening. Right. At this point, Switzerland probably is not doesn't have the best environment for such a virtual bank. But if everybody else does it around them, it's only a question of time until they allow it for them to allow it also in Switzerland to happen.
Okay, great. Thanks for that, Spiros. Okay, next question. Do you believe PSD2 will put the likes of PayPal, Stripe, etc. out of business?
That's a good question. Yeah, I think it has the potential to. I don't think it's a funny world we live in now where PayPal is kind of one of the incumbents, isn't it? I think it was only 2001 that they really sort of moved into the sort of mainstream there. But a lot has obviously happened between now and then. But I think kind of PayPal is actually one of the companies who are really sort of exist on the basis of APIs. So I think in terms of their ability to sort of react to it and benefit from it is going to be pretty sort of significant, really. But I don't see those guys disappearing in terms of what they do because of PSD2. But actually, it probably opens up the opportunity for more people like PayPal to sort of come into the market in terms of either utility payments providers or, people from a front-end perspective kind of owning that experience.
Great. Thanks, David. Okay, next question. How will blockchain save banks a lot of money?
Well, that's the billion-dollar question, I guess.
Exactly.
Doing it, but I think there are so many use cases within blockchain that are, and I think this is kind of the exciting thing about blockchain, really, in a kind of a sad geeky way that I'll get shot down if I try and explain this to my wife that it's exciting and fun type thing. But a lot of the really interesting use cases for blockchain sit within the back office. And I think the difference I've seen where fintech is sort of really traditionally been seen as a kind of a froth on the front of banking with regards to maybe a different way of looking at a user experience, rather than really anything dramatic kind of happening in the back office. But, when you've got things like smart contract capability, you've got really interesting things happening across supply chain management, trade finance, actually a lot of the really exciting use cases for blockchain actually just take, absolutely massive chunks of cost out of those back offices. So really, blockchain is an exciting thing, but it's an exciting thing because it really reinforces trust within the kind of mechanisms of the banking processes and takes out huge amounts of cost. So, really, I think I described it earlier on as kind of a bit of a reset switch for, some of the technology decisions that have been made over the last kind of 20, 25 years in banking organizations. And, a lot of the spaghetti that's sitting in the back office, a lot of these companies will be up for grabs when, blockchain really sort of comes to the front.
Okay, great. Thanks. I think we've got time for one last question. So this question is trust being rebuilt by the banking industry and therefore impacting fintech startups' opportunity to enter the market?
I don't see that. Actually. I think banks, most of them, not all of them, as we have some exceptions, they still try to work as they used to work before, with some nuisances by fintechs. I think much more has to happen until they will really change. And that's my opinion. I think trust is not built. It's not built by consumers, and it's not built by the employees of banks. That's the way I see it. But David, I don't know what's your opinion.
Yeah, I think this is a difficult one. I think on one hand, we're sort of seeing, I'd say, trust being eroded even further with banking organisations. In the UK, we've had, I think it's just over 700 branches closed this year, which is, every time any announcement from that side is made, there is a kind of wall-to-wall coverage on Sky and BBC and various different places, which is kind of not doing their, not doing their trusts any sort of favours with the sort of public. And equally we've still got things like the mis-selling scandals around PPI still ongoing. I think there's while it's sort of slowed down, the banks have still paid out about 500 million this year in fines just with regards to sort of mis-selling. So I don't think there is really the bleeding probably hasn't been stemmed enough to really sort of have that trust rebuilt in terms of the way that we'd want it to do. But unfortunately, I'd say on the other side of things, or fortunately, depending on your perspective, if you're a bank, that customers inherently have got incredibly short memories. I think it only takes a small amount of money spent from a marketing perspective to really sort of change people's perspectives. And I think that's very much indicated in the market. We've seen new banks like TSB come to market, which by any other name are basically the technology and the employees of Lloyds in bygone days, but with a significant amount of money spent from above the line marketing campaigns. And then actually they're sort of a different brand in the psyche with, different principles and different culture type thing. But, inherently they're the same thing. So, from a bank's perspective, I'd be fearful that, there's still lots of problems lurking. But, from a customer perspective and, send them a meerkat or do something to sort of have a catchy jingle, and you can probably paper over some of the cracks with customers in the short term at least.
I mean, if you make the customer believe that they come first, then they will start trusting again. I mean, for fintech companies, it's a very customer-centric environment because the customer is everything. And if banks do change their approach, then trust can be rebuilt. But that has to happen first.
That's very true.
Great. Well, David and Spiros, thank you so much for joining us today. It's been really interesting to hear your perspective on the key topics and trends within fintech. And we look forward to hearing more from you again in the future.
And thanks
very much.